Picking the right investments are everything, and bad investments compound into regret, which is something that really everybody needs to hear it. It's because sometimes those bad investments will compound into regret, and expected value is everything to an investor. Yet it isn't always regarded, especially with speculators. It's not really about expected value, you really think it is. It's about, I hope that my investments go up. But no, I want to tell you my reasoning why is that don't hope your investments eventually go up. Know that they do. Know that they do. Don't hope anything goes up. Especially since usually it's the choice that you have that it is. Especially with the S&P 500. It eventually goes back up. It's one of the best investments because every single recession, everybody wants to make their money, and after every recession, the stock market eventually goes back up. And that is, the buying the dip isn't the most priority. I think what is the highest priority isn't buying the dip, but being invested long enough where buying the dip doesn't matter. Because it's really about long-term success. And picking the right fund matters so much because there are so many with large expense ratios that not everybody pays attention to. There's all these ETFs and different things. But if you don't take a look at your expense ratio, you're losing thousands of dollars later in life, especially if you don't check. Nobody tells you, but they take those fees away anyways. There's a lot of investments where they take fees to having that due diligence and being really diligent. Investing it's simple, but like a war. And that is because the stakes are too high to be careless. In war, the stakes are too high to be careless. Same thing in investments. If you're careless about what your investment portfolio is doing, it's not going to end well. Same thing with retirement. You can't hope your retirement goes up if you don't even know what your retirement is being invested to. Like, I'm 19 and I was able to show my mom how to do her investments properly in her retirement account. I actually had to teach myself learning what are the best investments. How can I classify something as the best investment? And I was actually able to rebalance my mom's portfolio at 19 so that when she retires, she'll have a load of money. And it's all for her. I don't need her money because I really think it starts with helping people. That's my thing. It's helping. It's not about, oh, I need to make money off of you so I could do these things. I really want to help. And it's because investing gives you a piece of being rich, and the more wealth there is due to investments, the more innovation gets funded, the higher standard of living, all just because of making investments. And the most boring funds don't need validation by popularity. It's not about the most popular. It's about the ones with the best financials. And expected value gets higher over time because of time in the market, and not timing the market. It's being in the market long enough, not having to time when it's the best. Because really, if you wait for the market to go down, it doesn't really go down. Over time, it goes up more and more. So if you're gonna wait, you're just missing out on growth. That's really the truth of it. It's not about timing the market. I think there are some ways you could have like a small amount in bonds or something, and then when the market crashes, you could sell the bonds to buy more stocks. That's more when you have a ton of money, and I think you don't have to start with a ton of money. You really don't. And the best investments are timeless, the ones that have lasted the longest, because really, it's about having time in the market, not timing it. And that is why it's so important, because you don't want to make bad decisions that compound into regret, especially since a lot of anxiety and stuff is from things you had the choice to make but didn't make the choice. And I want you to realize that expected value is what matters to investing and to having your retirement account. It's about knowing that how much money you're just going to make. It really, expected value constantly goes up, so there's no point in waiting to buy the dip. I think just making constant contributions will make you a ton of money. And it's not just that, but picking the right funds like the S&P 500. Maybe a little bit of target date retirement, so you could still have some money sitting there pretty good in case the market crashes. You could still have some money. and really sell off your money, but also not have to deal with the market crash. And it's really about thinking in a smart way and understanding expected value, which is really just the probability times the outcome. And if you think something has a high chance of happening and it rewards you a good amount, but not as much as you think, you still have a high expected value. If something had a low chance of happening, but a pretty high amount, it could still have less expected value, even though you can make a lot more. And that is why choosing the investments that are long term, it's going to give you adequate returns, and your expected value is much higher than if you were to buy the dip. And that is why really also just choosing the best funds, because I don't want your investments to compound into regret. I mean, I'm 19 and I taught myself how to rebalance portfolios. And this took years in the making. Like, I was younger teaching myself about investments. And I'm really going to keep making more videos to teach everybody really the investment philosophy and how investments work, because I think investments are so important to give us freedom. And it really starts with just helping people. I want to help you make money. And it really starts with being diligent and understanding the expected value, but also the right funds. And if you get value out of what I tell you, please consider subscribing or liking the video, because I appreciate it, especially because I'm trying to help. And I want my message to go out there to everybody. I want to help people as much as I can. Even if you're not going to make a ton of money right now, I want the knowledge to compound and help everybody. And really, it's the stuff they don't teach you in school, but I think I can help. I mean, I'm in university and they don't teach this stuff, so I have to teach it myself. And now that I know, I want to help other people, because I think helping makes the world a better place, and also it compounds and it pays dividends in ways we might never understand, but it just makes the world better, especially helping people with their dreams. So making those investments that get you closer to your dreams.